Hey guys, welcome back to another episode. Today I'm going to take a closer look at two of my favorite semiconductor companies. First, we're going to start off with Nvidia. We can see the stock price is down roughly 2.5% as I am recording today's episode. We're also going to take a closer look at Advanced Micro Devices, AMD. The stock is down almost 5% as I am recording today's episode. So for each company, I want to take a closer look at different things. First, for Nvidia, there are some concerns I have for this company. The second, on AMD, we're going to take a closer look at their overall market share, that they have kind of grown in the server market, but things seem to be slowing down. And again, I just want to share my overall thoughts. So let's get started. So a few days ago, I kind of brought up this article I saw online where it talks about Nvidia's GPU demand is to exceed supply as Green Team bets on ChatGPT, thousands of AI chips expected to be incorporated by big tech. And one thing we are seeing is kind of this overall AI generative push right now. And that kind of AI generative technology needs a lot of products from Nvidia, mainly their GPUs, which are great for AI workloads. But I do believe, and I think this is where I'm fearful right now, is we just came out of this, not even come out, right? We're still in this huge consumer market over inventory correction, right? What we saw in 2021, it was a mass productions of GPUs for numerous reasons, right? We saw in the GPU market the cryptocurrency, but also kind of the laptop boom due to kind of COVID, hybrid work style, the education shifting to school online and stuff like that. So there's this huge kind of inventory right now in the consumer market, technology, and right now we are seeing the results of that with that over inventory correction. And we've seen companies like Nvidia. If we take a closer look at their reports real quick, here if we take a closer look at that revenue trend, we can see that gaming market, which is mainly consumer products, down dramatically both on a sequential basis and on a year-to-year basis. We've kind of seen a flat line in the data center for the past 2 quarters, and I don't believe Q4 is going to see much growth. So this is what I'm worried about, and something I've discussed in the Semiconductor podcast. I'll make sure to subscribe to that. I kind of have Nick and Billy kind of share their thoughts with me. But I want to say the thing that worries me the most here is that can this kind of huge hype of these big techs spending a lot of money on things like GPUs going to create a heavy inventory market or an over inventory market for the data center space? And again, we already heard from Intel and AMD in their past earnings, that in their most recent earnings, that the data center market, at least for the first half, is already expected to see some form of a slowdown or maybe not a huge acceleration on growth due to many companies doing inventory corrections. So I am worried that, hey, what's happening here might kind of create this kind of high kind of inventory market in the data center space, which can kind of bite Nvidia in the behind in the future, right? And again, we kind of saw Nvidia earlier on had to pay TSMC for workloads that they might have promised in their supply chain, right? Nvidia would probably expected a lot more demand on their side, so they paid the manufacturing of TSMC to have a little bit more lines available to them. But then Nvidia said, hey, we actually don't kind of have that demand available, so we're going to have to cut off some of the products we purchased from you. And as a result, they had some form of penalty, right? So this is something I'm definitely worried about. But this is something I have such a hard decision trying to find what's the correct answer, because there's two results here. First is Nvidia builds up this inventory. Actually, there's three results in my opinion. First is the best case scenario. Nvidia builds up this inventory, and this ChatGPT and OpenAI and all these AI generative solutions are here to stay, and that demand is strong, not just for the short term of things, but for the long term of things. So that's best case scenario, right? And I do believe that's why we're seeing Nvidia up a nice amount in such a short time, right? In the past month alone, up 25%. In the past year to date, is up almost 55%. So it does seem to the market that they might be hopeful of that. That's one scenario. The other scenario, in my opinion, is Nvidia builds up inventory, and then the demand is not really there. It might be there for the first half, but then that heavy inventory comes out, and then the second half of the year, it has too much inventory that they don't know what to do, and we start to see that the acceleration in the data center market, like we saw in the gaming market. So that's scenario 2, and I believe that would be a bad scenario. Then there's scenario 3, in my opinion, where Nvidia doesn't build up too much inventory at the moment because they're kind of used to that heavy inventory that we just saw that we're seeing right now. So they're going to be a little bit more conservative. But I do believe if they are a bit too conservative, they are going to have the likes of AMD kind of, hey, we see that there's some space here in the GPU market. We are expected to release our MI300 GPU APU in the upcoming months. Let's kind of ramp up that inventory and start to grab market share in the GPU market from Nvidia. So while I am super bullish for Nvidia in the long term of things, I think in the short term, especially with this huge roundup in price, things start to look a lot scarier, right? So I think in the short term, there's room for a lot of volatility, and that volatility can be a huge drop in stock prices, especially if the company is expected to report earnings next week.
Before we go any further, I want to thank you for watching, and I need your help to reach my goal of 30,000 subscribers by the end of the year. So if you can do me a favor, hit that subscribe button and thumbs up. Also, if you want some fantastic insight into the semiconductor industry, join my other channel, Semiconductor Investing and More, where I use my electrical engineering background to break down the semiconductor market. Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
Now, for the second company I want to take a closer look at is AMD, right? I mentioned about their market share. Like we can see the stock price is down over 5% today. Very similar, right? Year to date, the stock is up a nice amount, 25%. Not that crazy roundup as Nvidia. I do believe AMD is a little bit more calmed at the moment. It's not in that hype yet, but that is because their data center CPUs are not necessarily needed too much for AI workloads. Obviously, they can benefit from the huge growth in data centers. But if we take a closer look here, we do have Mercury Research. They did kind of give us a nice update in the CPU market for AMD. And the one that there's two I really want to talk about. First is that bottom line. AMD's overall x86 CPU market share has grown to 31.3% versus 28.5% a quarter ago. And if we take a closer look at quarter one of 2020, that was roughly 14.8%. So we can see the huge growth that AMD has made in just 2 years. I'm pretty sure if we were able to kind of spread this out to even 2017, 2018, the numbers are insane. So almost double since quarter one of 2022 in overall market share. Now, what is super awesome is if we take a closer look at the AMD server CPU, market share in quarter four was 17.6%. Now let's fast forward almost 3 years ago, that was 5.1. So in about 3 years, it has 3x, and I do believe that's insane, and it does show the strength of AMD's server CPU. Unfortunately, on a quarterly basis, it was only up 0.1%. And this slowdown in server CPU market might have some investors worried. And I kind of want to explain maybe why there is that reason where it's not huge acceleration on a quarter-to-quarter basis. It might kind of calm down some nerves. Here, if we take a closer look at AMD's most recent earnings, and the transcript can be found on Motley Fool for their quarter four earnings, Lisa Su mentioned that the previous generation 3 and generation 4, which was Milan and Rome, were basically on the similar platform for server CPUs. So if someone updated from Rome to Milan, there wasn't much of an upgrade phase. You would pretty much just buy the new processor and switch them out, right? It's not as easy as that, but that's pretty much how it was. Now, when it comes to Genoa, this is in a whole different platform. So there has to be a little bit more changes that happen with that shift. So because of that, the kind of adoption of Genoa, it's not slower than they initially thought. They're saying that, hey, there is still going at the pace that they thought it would, but it is slower than that Rome to Milan adoption, that from that third generation, from the second generation adoption. But AMD still believes that Genoa will have an amazing fourth quarter of 2023. So I know sometimes we might kind of look at these server CPU market shares and see that quarter 3 and quarter 4 was not much growth. I just wanted to explain why. Because Genoa, different platform, could definitely slow down the process. AMD mentions that it's a little bit slower than Rome to Milan, but this is not something that they are concerned about because they believe both Milan and Genoa can kind of coexist, and Genoa can also continue to grow that acceleration. So for me, I'm not too worried about AMD. Again, I'm a long-term investor on both these companies. Like I mentioned though, I do believe in the short term, Nvidia has a lot more to prove, especially with their upcoming earnings. So take care, have a good day, and see you next time.